What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So this has been a great week in markets all around. The CPI inflation print came in at 3%, which is the lowest it has been since March of 2021, sending stocks flying higher. Ripple won its case against the SEC, resulting in the entire crypto space rising by double digits. The SP 500 reached a 52-week high at 4,527.76 points. Gains year-to-date are at 17.34%. And suddenly, a new all-time high is possible. The pros are telling us why the recession is now delayed, and it's finally time for retail investors to enter the fray. So there you have it. Here, that's kind of where things are at this point. So where does that leave me as I think about Tesla? That's what I want to talk about in today's video. I'll go over the most recent noteworthy news around the stock. We'll look at the stock performance along with analyst ratings, and I'll close with what I'm personally doing as far as buying, selling, or holding. And the answer here might actually surprise you. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and a thought process behind it. I recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. We are now 3 days away from the Tesla earnings call to be held on July 19th. Expectations are for a beat on the top and bottom line. Tesla delivered a record 466,140 vehicles globally in Q2. This is not only a year-over-year improvement, but also a quarter-over-quarter improvement, as you can see on the chart here. The price cuts they executed on, in addition to the EV tax credit, has definitely unlocked some of the pent-up demand. And if you're wondering if this can continue, I'd like to point you to the fact that the most anticipated vehicle in the Tesla lineup, yes, that would be the Cybertruck, with well over 1 million pre-orders, just this week had its very first production model roll off the production line at Giga Texas. This is a huge milestone and may hint at the fact that Tesla could actually be ahead of schedule on when deliveries will start. I would expect that we get more clarity come next week during the earnings call. Also, I find it interesting that the very first confirmed production model isn't fully shown in this picture. I believe that this is intentional, and we will have a proper reveal with all the specs at a later date to be announced, also possibly during the earnings call next week. The last piece of news I want to touch on is the announcement that Mercedes-Benz has officially signed up to adopt the Tesla charging standard. This makes them the first German automaker to take the leap. However, likely not the last. Volkswagen could be following in their footsteps shortly, as they have confirmed to be in active negotiation with Tesla. The bottom line here is this. Tesla is on pace to deliver a minimum of 1.8 million EVs this year, matching the guidance they gave at the start of the year. And this is before you throw in the Cybertruck. Looking at the stock price performance, the stock is up 2.53% this week. Looking year-to-date, it is up 128.43%, or basically, you just over doubled your money. But here's the kicker. The 52-week low, which we hit intraday during the first trading week of this year, was $101.81. So at this point, anyone who bought at that particular point in time has nearly tripled their money, okay? That's massive. And that cannot be overstated, right? So now looking at the overall consensus from analysts, the stock has a moderate buy rating with an average price target of $237.50. The high end of the projected range comes in at $335, and the low end sits at just $85. That's a pretty big spectrum, right? The average price target suggests that we could see a nearly 16% retracement, but we could also push higher towards the top end of the range before a correction. So where does that leave me in terms of buying, selling, or holding? The last time I covered Tesla, I told you that I wasn't in a rush to add more because I was expecting the stock to retrace once it crossed over the $200 mark. Even though I fully expected more automakers to adopt the Tesla standard, I underestimated how quickly they would, back to back to back, okay? Now, between that, Tesla's delivery numbers, and the overall macro picture improvement, the stock ran even farther than I expected. Now, what that actually means is that I well over doubled my investment on Tesla at this point, and therefore I sold the majority of my Tesla stake. I realize that this may come as a shocker to most, given that Tesla is my highest conviction play, but let me explain the thought process behind it, right? So now, year to date, Tesla is the best performer in my stock portfolio with a nearly 200% return on investment, while NEO, Virgin Galactic, and ChargePoint have been underperforming. Now, ChargePoint specifically actually has negative returns year to date. Now, because my average on NEO and Virgin Galactic is higher than their respective stock price, this has been great for driving the average cost down on each of those positions every time I bought more. And so really the fundamental question I had to ask myself before selling the majority of my Tesla position was, what is most likely to double or triple over the next 12 months in my portfolio? After the run-up Tesla just had, it is the less likely of the bunch to achieve those kind of returns over the same time frame. And when I look at ChargePoint, it is still struggling. Most believe that Tesla opening a supercharger network to the rest of the industry makes ChargePoint less appealing of an investment. That, of course, is inaccurate, and I covered the why behind it in my previous video here. But that is the current sentiment and narrative, which is why ChargePoint is struggling. Now, I firmly believe that both NEO and Virgin Galactic are primed for at least a doubling of their stock price over the next 12 months. It is for that reason that I rotated my Tesla gains into both NEO and Virgin Galactic. If I'm right and this strategic move pays off, as I expect it will, I'm looking at a six-figure payday that would not only allow me to fully rebuild my Tesla position, but also further expand upon it while still maintaining a fairly sizable position in both NEO and Virgin Galactic. I personally like that prospect, and that is why I made the move. Now, obviously, Tesla could still surprise us and double again, and that's the reason why I kept some skin in the game. This is a way for me to not feel FOMO should the stock skyrocket again and not completely lose out on those gains. The last thing I will say is this move is strategic in nature and is a play to better set myself up for success by utilizing the gains that the stock market has afforded me via Tesla. I'm still extremely bullish on Tesla, however, I believe that this rebalancing of my portfolio will help me achieve exponential returns in the next 6 to 9 months, and therefore it makes sense to me. Time will tell if this was the right move. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.